the next 10 years is going to be a challenge for those people who aren't adequately prepared for it.
Keeping your money and saving in dollars is the absolute worst decision one can make right now.
This is why I just say, get the hell out of credit, get into real money, which is only gold.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 29th through October 6th, 2025, while supplies last. First this week, 1-ounce gold Philharmonics are just $75 over spot. Next, 90% silver US half dollars are just 69 cents over spot per ounce. And finally, the silver Australian Year of the Snake coin for 2025 is just $5.99 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
We've got a long-awaited member of our panel has just joined us, Andy Schectman, the CEO of Miles Franklin. Andy, I'm going to give you an intro, but first of all, just welcome aboard.
Appreciate it. Sorry, Monday mornings came into the studio and everything was unplugged. I think I've exhausted my aggravation for the week.
I think a lot of us feel rather unplugged sometimes on Monday mornings.
Yeah, I know.
In addition to your studio there. Andy Schectman, by the way, for those of you who have been awaiting his arrival here, is the co-founder and president of Miles Franklin Precious Metals. For nearly 20 years, he's been a prominent speaker at financial conferences and independent media. He holds a distinction of having the most viewed video ever released by Kitco. This spring, in addition to continuing appearances on various industry podcasts, Andy launched his own channel, which has quickly gained traction, now past 70,000 subscribers in a short time at youtube.com/MilesFranklinCo. After founding Miles Franklin in 1989, Andy became a licensed financial planner specializing in Swiss franc and alternative investments. Under his leadership, Miles Franklin has exceeded $11 billion in sales, earning a reputation for trust, ethical practices, and exceptional customer service. Andy views precious metals as timeless wealth, proven resilient through events like world wars, hyperinflation, and the Great Depression. He emphasizes gold and silver as enduring legacies, not merely investments to be preserved for future generations. And he frequently discusses shifts in the global financial landscape, including the BRICS alliance, the petrodollar's decline, and the rising significance of gold and silver in central bank strategies, underscoring their impact on dollar's global role. And in fact, that's exactly where I wanted to have you kick off, Andy. So actually your intro here, your introit is timely, because we've been talking a lot about financial managers and asset managers having a different landscape now than prevailed over the past 4 decades. And we've been speaking a lot about interest rate regimes and that sort of thing. We haven't addressed as much the global pivot away from the predominance of the U.S. dollar and U.S. treasuries. That's something that you've studied very closely and spoken widely about over the past 3 years. And perhaps you could take it from there and give us some observations that you've made, some breadcrumbs that you've connected that underscore something that Alasdair often mentions, which is it's usually the residents within a country that are the last to understand the weakness of its currency or its debt market, that the savvy international owners of those currencies and debt usually awaken first and make other plans before the domestic users. Can you take it from there and give us the high points of why you feel the current environment may not be what the last 4 decades have been like for those who are counting on the old tricks to manage assets?
I think I heard the majority of the question. There was an awful lot of feedback in there. But in any case, if you're speaking about change in the interest rate environment, I don't know, I find it very interesting that we see the chief investment officer for Morgan Stanley shift from a 60-40 allocation to a 60-20-20, 60% stock, 20% bond, 20% precious metals. Michael Hartnett, the chief investment officer for one of the investment, I think he's chief, for Bank of America, just came out with a 25-25-25-25% strategy. Again, you're seeing big money advisors, money managers, or investment officers reallocate their their clients' portfolios away from a 40% allocation to U.S. Treasuries. They are pivoting into what would have been unimaginable. As Rick has often said, and I borrowed that statement from him for so long, 0.5% from Joe and Jane Sixpack to the Harvard Endowment Fund. And I caught the last part before I jumped on here where the Harvard Endowment Fund actually did buy some gold and silver. But we are beginning to see, I think, the money managers or the investment officers from these large institutions pivot the way that the central banks seem to have been doing now for at least a year or two, where they have been shedding U.S. Treasuries in favor of gold, which not only has outperformed the U.S. Treasury market. In fact, it's doubled the performance of the 10-year Treasury over the last 25 years. But look at last year, where gold was up north of 40% and the U.S. Treasury 4.5%, or this year, where you have the U.S. Treasury three-quarters of the way through the year, call it up 3%. Yet the dollar's down 11% and gold is up nearly 50%. So we are witnessing a pivot away from traditional forms of investment, traditional ideology, into something that we have been talking about that was fringe. And you never heard money managers talk about anything greater than a 5% allocation to precious metals. Now, we always knew that that was underweighted, certainly, but to see the CIO from some of the biggest commercial banks on the planet start to do this tells you that we are moving towards some form of a new understanding, appreciation, or integration of gold and silver into people's portfolios. And quite frankly, if they would have been listening to guys like Alasdair or Rick a long time ago, these moves would have been made years ago when there was still a tremendous amount of upside to be made. Now, not to say there isn't now, but how much of the move has been missed, I guess only time will tell. Actually, I don't think that it's been too much in comparison to where I think it is going. But I think the most important thing to take away from this is that you're seeing some of the biggest and influential institutions here in the United States rethink their investment ideology. It's an interesting time, and I hope the general public catches on before it's too late, because I can tell you on the retail side of things, we've seen very sophisticated big money jump in with both feet over the last month or so. Business has been extraordinary. It hasn't been what it was like in 2021, January, February, silver squeeze, where we were getting 500 orders a day. Now we're getting more like maybe 100 or 150, but the size is much greater. The understanding is much greater. The mainstream, they haven't really woken up yet, but there is a subset of people probably listening to Rick and Alasdair and you, Dunnigan, who are waking up. And hopefully it's not too late for the rest of the public. Certainly, I think this is a change that is long overdue and one that I welcome very much. So hopefully I understood your question well enough with that feedback and answered it appropriately.
Yeah, I'm going to follow up again because I'd like you to outline for us what you think the changed environment is related to the BRICS global pivot away from the dollar and the treasuries. Because if money managers are assuming that the last 4 decades of dollar hegemony and U.S. Treasury stability is going to be what they can expect for the next decade, how do you believe, if you do, that the landscape, that the playing field has fundamentally shifted now, and that they need to wake up and realize they're playing a different game and they need to use a different strategy?
Well, I think the biggest indictment against the system is, well, there are a couple. Number one would be the cross-border payment system, the renminbi cross-border payment system that was the M-Bridge. And this system, which is operational, has already been connected to 11 countries in Southeast Asia, which in and of themselves have twice the population of the United States, about 800 million people. And they also have taken over as China's largest trading partner by far. They represent almost 40% of global GDP. They've also connected several Middle Eastern countries, 5 or 6 of them, into this system. And I think when you take a look at the moves that they are making, it is the development of multi-jurisdictional vaults throughout what ultimately, I believe, will be the Belt Road Initiative. The first vault is completed in Hong Kong. The Shanghai Metals Exchange is expanding their reach. The first one is done in Hong Kong. And what it basically means now is that digital yuan is immediately convertible into gold in the Shanghai Exchange in Hong Kong, if you'd like, for delivery without having to convert first back to US dollars. Now, the second exchange, ironically, is being built in Saudi Arabia. Now, if you go back to the genesis of the mBridge platform, Saudi Arabia was the fifth participant, full participant in mBridge. They are now building one inside of Saudi Arabia. Now, I listened to an interview with the gentleman who developed BRICS Pay, which is the cross-border payment system, B2B, business to business, retail, in essence, small bank to small bank, or business to the public. It's like a credit card, in essence, that will connect any of the folks who use the BRICS Pay system. Now, we have to understand that once maybe the biggest move in all of this, that a lot of the naysayers would say the BRICS aren't big enough, they're not substantial enough. And I understand people why they would say that. Independent of their size as is, which represents, I don't know, close to 50% of global GDP. But when Sergei Lavrov, the Russian foreign minister, came out and said, we're opening this up to everyone except the West, except the dollar, the pound, and the European Union, the bells went off, and they should for everyone. And so the gentleman who is setting up BRICS Pay, the developer, said, yes, we are in the process of right now rolling this along with BRICS Bridge, which is central bank to central bank. These are being opened up and rolled out through the Belt Road Initiative right now. That's 75% of human population. And then you throw in the other institutions like the Shanghai Cooperation Organization and the Eurasian Economic Union, along with the BRICS. These are all very closely tied entities. They're not all part of BRICS, but they will all be able to settle on this cross-border payment system that settles in 7 seconds, free from SWIFT interference at a 98% reduction in fees. But the kicker to it all is that, yes, they all would use their own cross-border payment central bank currencies, the digital currencies, that the majority of the countries in the world are already developing or have developed. The key is that they will be able to settle imbalances in gold, and ultimately, through a series of multi-jurisdictional vaults that started in Hong Kong, is now being built in Saudi Arabia, and then through the rest of the Belt Road, so that they can settle imbalances in gold or completely settle in gold. I think it is a trend that is growing with legitimacy by the day, and I think to underestimate it is a mistake. I think that that's kind of what they're counting on. I guess we'll see how it all plays out. This is not a common currency. This is a common settlement currency, with gold replacing not the dollar, but really what stands behind the dollar, the trust that we've lost. Anyways, that's what I think about the BRICS, and I'm happy to keep going if you want.
I think you're absolutely right about that, Andy. The only thing that's missing is a fixed exchange rate between gold and yuan. And I think that will come. It'll come in time, not very much time. And I guess that from China's point of view, that's really where they see themselves going. But they can't introduce it, if you like, without the dollar actually destroying itself, for the very simple reason that China does not want to be blamed for the end of the fiat currency system. But this is looking like Bretton Woods version 2, essentially. Gold would not be exchangeable for ordinary citizens, but when it comes to trade imbalances, that will be the medium.
And I guess I would add one other piece, is that when you add into it the BRICS Pay layer, which is the B2B side, where anyone who possesses this technology will be able to use it to conduct business. And the fact that it's being rolled out to 75% of human population, the fact that the only institutions, the only countries that will not be able to use it are those within the European Union, the UK, or the United States. All of this settlement outside the dollar, whether it be on central bank side or on the B2B side, on the retail side, is chipping away little by little at the dollar hegemony. And then when you add into it the ability to purchase gold instead of U.S. Treasuries, as has been the status quo forever, this chips away at the reserve status. And why would anyone want to own our Treasuries with our fiscal irresponsibility, $2 trillion deficits every single year, and the weaponization of the Treasury market, the ability to sanction? And President Trump, God bless him for doing what he's trying to do, but when you say to the BRICS countries, if you do this, you unite, we're going to add 150% tariff. That is not a tariff. That is a sanction. This is what is pushing all of these countries together. And I guess, to me, the stroke of genius in all of this is not just making it proprietary to the BRICS countries, but opening it up through a series of treaties, if you will, through all of these countries who are in some way or fashion tied to the BRICS countries. And that, to me, is the key to I think this becoming an idea that has merit, to one that is wholly legitimate over time.
I think one thing that's interesting. One thing that's interesting in this is that until this happened, China basically cornered the gold market. I mean, there's no other way of putting it. Yet now they're opening up. So, this is a major move. It really is a major, major move.
Rick, any comments from you on this international scene?
Yeah, I take a slightly different view than Andy, which is to say that the U.S. dollar is arguably the worst currency in the world, except, as Doug Casey says, with the sole exception of all of the others. I used to sell Sprott products, gold and silver in particular, around the world. And, we would trot ourselves to Seoul and Taipei and Shanghai and Beijing and Tokyo, and all these wonderful places. And I remember saying to these guys, after I got to know them, I see these U.S. Treasuries as an American. I'm very flattered. You guys send us all kinds of cool stuff, computers, steel, cars, and we send you back promises to pay written on pieces of paper. Given our fiscal levels, doesn't this seem like a bit of a lie? And I will never forget one Asian gentleman looking at me, smiling wryly and saying, "Yes, Rick, a deep and liquid lie, unlike the lies we tell each other." I suspect that although ultimately the U.S. dollar will lose 75% of its purchasing power, I think it will perform roughly in line or a little better than most of the other currencies. I do believe, as Andy suggests, that the hegemony of the dollar and the hegemony of the U.S. Treasury as a savings instrument will be challenged over the next 20 years. But I suggest that the U.S. dollar will still be the world's reserve currency for the balance of my life. For the record, I'm a very healthy 72 years of age. When I look at the challenges that face Russia, that face China, that face Brazil, that face India, I'm not envious, even relative to the challenges that I face as a U.S. dollar holder. This isn't by way of suggesting, by the way, that someone doesn't denominate their own savings in an instrument that doesn't have a built-in constituency for devaluation. If you look at every major currency in the world, one of the ways that they fight trade wars is impoverishing their citizens by reducing the purchasing power of the wages that they pay. Gold is the only medium of exchange, that's simultaneously a store of value, but more importantly, arguably, the only effective global currency that doesn't have a built-in political constituency for devaluation. Every other currency has a built-in political constituency around employment, for devaluation. And that, to me, is an important differentiator. I agree with what Andy says around the replacement of the weaponized SWIFT settlement system on a global basis. And by the way, I think that's a wonderful thing. The proliferation of currencies, including cryptocurrencies, is a wonderful thing. I'm a consumer of currencies. I want people to invent lots of them in hopes that some of them will serve me better. I don't think that the relative decline of the U.S. dollar relative to other currencies is a particular reason to own gold. And I don't think, ironically, in a relative sense, it's going to happen. I think the US dollar will do well relative to other currencies. I just think it won't do well compared to gold or compared to rational allocation.
Well, if I can just butt in here, I very much take the point that the dollar is the king rat of currencies. It is the top fiat currency. I mean, when you look at what's going on in Europe, France, Britain, Germany, etc., I mean, there's absolutely no doubt that the euro, sterling, also the Japanese yen are fundamentally weaker than the dollar. And they don't have that cachet, if you like, of being the reserve currency, any of them. And I mean, thinking about the geopolitical situation, I mean, there's no doubt that Russia is winning the war against Ukraine. That will be won on the battlefield. We just have to think what that's going to do with the euro. That is going to be, I think, a catastrophe for the euro. Principally because the European politicians, they haven't a clue what they're doing. They don't understand. They just don't understand what's going on to the east of them. And not only that, but there is so much money being invested in defense and also, lines, previous bank lines and all the rest of it into Eastern Europe. This I think is going to be, that's going to be the moment when the euro really starts falling, really declining. It's not so much the inflation story, it's the loss of confidence story. That's what they've got to watch out for. And as the sterling, the only reason it's where it is because its bonds are yielding higher than any of the other major currencies. But we've got a real disaster on our hands here. We really have. And that is going to drive sterling down against the dollar. So, I mean, your point, I think, is right. But, these are all forms of credit. How do you know it's credit? Well, because there's an obligation on the other side of some balance sheet or other. In this case, we're talking about central banks as issuers, to actually pay. Now we know it's a balance sheet entry, but it is credit, and this is why the only way to, if you like, hedge yourself against this catastrophe, it's coming catastrophe, and it's not just America, it's Europe, Japan, etc., with all the central banks technically bust. The only thing to do is to get the hell out of credit and get into gold. And at the moment, silver seems to be probably somewhat better. And you could probably also get a bit of leverage if you know what you're doing, and that's the key in the mining sector. Because there's an old story in London about Australian mines that, how do you define a mine, a hole in the ground, surrounded by liars at its top? So, you've got to know what you're doing in that game. But the rewards, I think, could be absolutely tremendous. They really could be.
This is leading us where I was hoping we would go, and that's for a bit of hope in this story, because we've been talking about a lot of woulda, coulda, shouldas for those, in the preparedness arena, that's where our channel started. There's an old saying, I'd rather be 7 years early than 1 day late. I know, Rick, you're a fan of that in the financial arena. You'd rather be early than late. But for those who are just now hearing this message and going, oh, I guess I probably should have not been going with the herd and with what worked in the past, but looking at the system that we're facing through new eyes and through forward-looking indicators rather than in the rearview mirror. Could each of you suggest what you think would be prudent steps that money managers, asset managers, treasurers of funds that are shepherding them on behalf of others, and sure, moms and pops themselves should seriously take a look at in the current environment in order to come out not just surviving, but thriving in the next decade? Andy, you want to kick us off?
Yeah, sure. I mean, I think if you look at what the premise is of the Mar-a-Lago Accord, Stephen Mirren, who coincidentally has filled the vacated spot at the Federal Reserve, and much of what President Trump talks about, it is to somehow find a way to bring back manufacturing, and that would start with the devalued dollar. I think saving in dollars, as Rick is famous for saying, if you're not a contrarian, you're destined to become a victim. If you save in dollars, you're going to go broke. When he said on my podcast, when I interviewed Rick in just a moment ago, he said he believes a dollar could lose up to 75% of its value. I don't think you need to know much more than that, that you need to have assets. Assets feed you, liabilities eat you. The dollar is a very big liability right now in terms of retaining and maintaining purchasing power. The dollar's down 11% already this year against a basket of currencies. It's down nearly 50% against gold and silver. So to me, the biggest mistake people can make is to have too much emphasis, if you will, on the U.S. dollar, and I think that is an easy one. At least to me, that's a softball. So it would be to mitigate your exposure to the U.S. dollar best you can and find assets that will do well in this type of environment. Precious metals equities, even cryptocurrencies. I think that keeping your money and saving in dollars is the absolute worst decision one can make right now.
Alasdair, anything to add to that?
Yeah, I would caution cryptocurrencies. I mean, Bitcoin reminds me of the tulipomania, but without even the physical presence of bulbs. That is, I mean, it is a symptom of massive speculation. It's really as simple as that. It's got no legal standing whatsoever. And furthermore, it's being used by crooks and shysters. I mean, it's got all the wrong people in it. I wouldn't touch it with a barge pole. So, stay out of crypto. It's a waste of time. There is only one legal form of money, final settlement, and that is gold. Possibly silver, but particularly gold.
Let me just jump in for 1 second before Rick answers. And 98% of my being agrees with Alasdair saying my goal in bringing Michelle McCory on board here was to unite the two communities. Because although I am not a crypto person, I am a hard asset person to the nth degree. I own a precious metals company and I maybe own less than a half a Bitcoin, maybe, if I'm lucky. And that's it. Is that we see the world similarly in many ways. And instead of being divisive, I think the argument becomes much more cohesive, much stronger, not only your portfolio, but your understanding of monetary affairs. My goal is to bring the two communities together, to take the people who have made all this money in this speculative new form of wealth or whatever you want to call it, speculation, and to take some of that profit, pull it off the table, and put it into precious metals. So, I'm not as smart as Peter Schiff, but I'm also not as divisive as he is, and he has created a wedge between the two communities. All I am simply saying is I'm trying to let the folks know who have done very well in cryptos that I think they'd be far better off taking some of that profit, putting it into precious metals, and even if they want to leave their initial bet on the table, just to be clear, that is why I am trying to take a position of being less than perhaps as candid as I would like to be about cryptocurrencies and more trying to unite the two communities.
Well, it won't surprise you. I take a completely different view, Andy.
I understand that, and I respect that fully, Alasdair.
I mean, really, you just read the history of manias and all the rest of it, and it's up there with all of them. It really is. When the credit bubble pops, which we were talking about before you joined, when the credit bubble pops, that one will go. And I mean, if you want any evidence that this is the case, apart from, reading up the history and understanding the psychology of markets, just look at what it correlates with. It correlates with the Magnificent Seven. I mean, it's just absolutely the same cohort of people, are punting this one. And, the Magnificent Seven are going to fall apart. I mean, I remember back in 2000 when the NASDAQ collapsed. I think it lost something like 75% of its value. And that was basically dot-com rubbish, which turned out to be just momentum chasing. That's all this is. There is absolutely, if you think there's some theory behind this, I can tell you there is not, because not one Bitcoiner understands the relationship between money and credit. They really don't understand it. If you're going to have something that increases in value, you cannot issue credit on the back of it. And that is absolutely required for any economic progress, the ability to finance things. And if you're talking about financing on the back of a rising Bitcoin currency, nobody is going to go into business. It's a waste of time. It's dead. So I just don't go with it, and I'm never ever going to give any quarter on that. It's as simple as that. And also the legal position. I won't go into all that. As far as my sort of view on anything is that I am convinced that the dollar has got considerably more downside in purchasing power than Rick intimates. I think if I was in his position as an investment manager, I would similarly take some sort of similar course, because I wouldn't want to scare the horses, as it were. The whole of the investment and investment management industry, I think, is most of it's going to disappear. I really do think so. And when you look at gold, I mean, at the moment, okay, we've got major banks coming out and saying, you have 40, 20, 20, whatever they're saying. Yeah, but none of the clowns have got it. They haven't bought it yet. And we're talking about banks which manage trillions. And here are here they're sort of chief strategists and all the rest of it saying gold is going up. You've got to have some gold. The poor fund manager hasn't got any, and he doesn't know where to go and get it either. The amount of liquidity in the market is just not simply enough to handle this shift of emphasis, if you like, away from tech rubbish into real money. It's just not there. I can see that when this credit bubble pops, it's far bigger than 1929. This is a real disaster staring us in the face. And this is why I just say, get the hell out of credit, get into real money, which is only gold, not Bitcoin, only gold.
Rick, you've been patiently waiting for me to invite you back into the discussion. Go ahead.
I don't have much of a comment on that, except for to harken back what I said earlier. At age 72, having made a few mistakes in my life and been spanked for them, I prefer to concentrate my portfolio and my advice around assets I understand. I don't have a view on crypto. I said earlier, when people ask me about NVIDIA, I can't pronounce it, never mind understand what it is they do. I am impressed by how much free cash they generate. And when people tell me that the market capitalization of NVIDIA is greater than the market capitalization of the gold mining business, I tell them because the gold mining business, if you include the junior miners, loses money on an annual basis. And NVIDIA makes money. So it makes perfect sense that something that makes money would have a higher market capitalization than something that doesn't make money. I get that. But I don't get it well enough to go into businesses that I don't understand. I don't have any dog personally in the crypto fight.
How about your words of call to action or words of hope for money managers or asset managers?
Listen, I think we'll get through this decade like we got through the decade of the 70s. I just think there's going to be a reckoning. And I think that most people aren't well enough educated or well enough disciplined to get through the reckoning easily. I think 30 years from now, the world will be unrecognizably better than it is today. I think getting from here to there is going to be a challenge. All of the doom and gloom associated as an example with the U.S. economy reminds me of nothing so much of the decade of the 70s. I remember sitting down with my grandfather in 1968 or 1969, bemoaning all the problems the United States had. The campus unrest, the war in Vietnam, this moron named Nixon. And I remember my grandfather saying, my generation faced some difficulties too. We had World War I, then we had we had the Great Depression, we had World War II. We're going to get through this. And that's the way I look today. The United States is an example. Despite these morons that we elect, is still a place where 5 or 6 kids get together in a garage in Sunnyvale and out pops Google. Or out pops the unpronounceable NVIDIA. The lovely thing about the world looking 30 years out is that with the distribution of education and with the distribution of information via the internet, that garage doesn't have to be in Sunnyvale. It might be in Jakarta. It might be in Lagos. Looking 30 years out, I think the advent of technology makes humans enough more efficient that the capital shortages or the capital disallocations that we feel won't matter much. I may or may not be alive to see it. And of course, the net present value of something that happens 30 years out at a 7 or 8% discount is nil. I'm just trying to say that looking to the long term, if you're prudent, the outlook is extraordinarily bright. The fact is, getting from here to there, particularly with the mindset that allowed you to prosper in the period 1982 to 2022, means that the next 10 years is going to be much more difficult for you than it otherwise would be if you adopted yourself to the changing set of circumstances. One of the things that's always amused me about the community around gold, I used to, when I was an active broker, poll my wealthiest client about how they saw the outlook for the world economy and everything. And every year, my 50 best clients would say, oh God, the world's going to hell in a handbasket. This is wrong, this is wrong, this is wrong. I'd say, how's your business doing? My business is great. And the disconnect between my top 50 clients, all of whom saying their businesses individually are great, with the world going to hell in a handbasket, is something that I would remind them of on an annual basis. And I would remind people listening to this call that the next 10 years is going to be a challenge for those people who aren't adequately prepared for it. The world isn't going to end. Doug Casey famously says that a bear market doesn't make the world less wealthy. It just changes who owns things. If the price of something falls by 50%, but it exists, it's the discrepancy between price and value that changes, and who owns it.
Well, I want to give everybody a chance to let people know how they can find out more about the work that you do, because you are all on a mission. Each of you has dedicated a major portion of your energies recently and going forward to educating and getting the word out on how people can prepare to survive and thrive. Andy, can you tell us how people can find you?
On YouTube at Miles Franklin Media. Of course, milesfranklin.com would be the best way to reach us. And for those people who want our special price list that for a myriad of reasons we don't publish online, that would be send an email to info at milesfranklin.com. Let us know that you saw us on this show. Prices will be as good or better than anywhere in North America, or any questions that they have, info at Miles Franklin. And Dunnigan, thanks for having me. I'm very sorry I had such challenges in getting on. It was something that I was really looking forward to being a part of from the beginning, but at least I got to be here for the end, and I appreciate it being with you and Rick and Alasdair.
Very well, grateful for your presence. And Alasdair, how can people find your work on Substack?
Well, MacLeodfinance.com will take you there. As you said, I'm trying to educate people about the difference between money and credit, economic conditions, geopolitics, all the things that matter when it comes to protecting what you've got in terms of assets. And as I said earlier, I think it's really the emphasis now is protecting what you've got rather than chasing, sort of accumulation of gains and things like that. Anyway, that's where you find me.
And Rick, remind people where they can find out, because you've got a whole classroom set up for people to find out more.
Yeah, you can find me two places. My educational channel is Rural Investment Media. To give you an incentive to come, if you go to ruralinvestmentmedia.com and list your natural resource stocks, I'll rank them for free. Please no tech stocks, please no pot stocks, please no crypto, resource stocks only. And then the other place to reach me is Battle Bank. If you are unhappy with your current bank, which I suspect is everybody listening to this podcast, Battle Bank is a new kind of bank, one where you can bank in 20 currencies, one where you can allocate your IRA as you see fit, not the way Wall Street sees fit, and one where, if you have a substantial investment in gold and silver, you can access credit secured by your gold and silver. You don't have to sell any of your gold and silver to put down a down payment on a triplex or do something like that. You can access credit. So if you're interested in somebody who battles for your banking business, check out battlebank.com. Get on our wait list. I'm delighted to say, after 4 years trying to get chartered by the federal government, we have bought a bank and our change of business plan has been approved. The transaction should close this week. and we will be open for your business probably in January of 2026.
Yeah, and any clients of ours who are watching this, we have also arrangements with Battle Bank. Clients of ours that have metals stored in any of our 9 BRICS facilities will be able to access that that program that Rick is doing. We're very excited for you, Rick. Congratulations. Wish you nothing but the best.
Got to say, we're absolutely thrilled to be doing business with Miles Franklin. I'll say this publicly. I have had my clients do business with a lot of precious metals dealers in the last 40 years. I have never, to my knowledge, had a complaint about customer service with Miles Franklin going back 30 years in the retail business. That is not common.
Well, it's something we take very seriously, and we're so excited to be a part of it, and can't wait for it to open, and wish you nothing but the best. But I know wishes that won't even matter. You're serially successful. I'm sure this will be a wonderful program that I'm looking forward to being a part of personally myself.
Thank you so much.
And folks, if you don't want to miss a single episode with Andy or Alasdair or Rick on my channel, Liberty and Finance, you can get on our free mailing list by going to libertyandfinance.com, all spelled out, all one word, libertyandfinance.com. Make sure you enter your email address, click submit, and then confirm on the confirming email, and you'll get 1 email in your inbox per day. We won't spam you, and we will keep your email private. We don't share it with anyone, and you'll never miss a thing with any of these guests, any of our other guests who join us there on Liberty and Finance, and any weekly specials, since I and my 2 sons who are working with me are all licensed and bonded bullion dealers working with Miles Franklin. So you won't miss a thing. Everyone here, thank you for setting aside this time. We're in widely disparate time zones. Alasdair's in the UK. Rick, you're back on the Pacific time zone. Andy and I in Eastern. So it took a lot of finagling on all of our parts to pull this together. Thank you, gentlemen, for being here on behalf of all of our viewers and subscribers. Just thanks for joining us on Liberty and Finance.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 29th through October 6th, 2025, while supplies last. First this week, 1-ounce gold Philharmonics are just $75 over spot. Next, 90% silver US half dollars are just 69 cents over spot per ounce. And finally, the silver Australian Year of the Snake coin for 2025 is just $5.99 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.